Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Canada. Today's date is March 27, 2024. Let's get started. We know from last week there was a sharp move to the upside and then a sharper move to the downside, followed by a equally sharp move to the upside. That move to the upside took the price back into this swing area through here between the 1.36049 and 1.36269. That level is defined by a number of different swing lows and swing highs going back in time. These are some of those levels. As you can see, the price either found resistance or support against that level. In this case, it found resistance and moved sharply to the downside. And it wasn't until about 4 or so weeks ago that the price moved back up to that level. In trading last week, the price highs came within those levels and found willing sellers into this week. The price to the downside at the beginning of this week against this swing area moved down toward the, well, it looks like the low price here came in at around the 1.3552-ish type area before rotating back to the upside. And where do we go today? Went right back up to the low of this swing area, which comes in near the 1.36049. Again, that area extends all the way up to 1.36269, inclusive of the 61.8% retracement, the move down from this high to this low right here. So, going forward, folks, not only today, but going forward, we need to get above this yellow area here, above the 61.8% retracement to increase the bullish bias. Absent that, and we just are developing this ceiling here, a strong ceiling up here between that area, which was the same ceiling that we had right going back to this area right here. So there is a pattern here that is being upheld in trading this week and last week and 3 weeks ago and 4 weeks ago and so on and so forth. That is keeping a lid on this currency pair. Now, on the downside, the cluster of moving averages all through here would ultimately need to be broken to increase the bearish bias in trading last week. The prices did move below those moving averages, moving down toward the broken 38.2% retracement of this move to the downside, where we found support buyers against that level here and bounced the price to the upside. So on the downside, we're going to need to get below the 50%, starting with 50%, and then the 200 or 100 bar moving average in the 4-hour chart, 200 bar moving average in the 4-hour chart, 100-day moving average, 200-day moving average in order to increase the bearish bias to the downside. So the sellers are leaning against the swing area, the ceiling area. The buyers down below are finding support buyers against, well ahead of the moving average cluster on the downside, but those remain our target on the downside that we need to get to and through for the bears are going to take more control. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.